Welcome to the Stock Market Morning Prep video for Friday, June 20th. Another pause day in the marketplace. We had another consolidation, just kind of stepping up from what happened on Wednesday. Janet Yellen, FOMC. We rallied up on Wednesday, and Thursday, Friday just really did a whole lot of nothing. We are definitely into the summer months of trading. Very, very quiet, low volume trading, so it's definitely going to be a stock picker's market. We still want to see what the trend is, where the trend is on the charts, so we can get a better hold on things. So we're going to do that today. I do have some. I kind of stayed away from the indicators because it's really not telling us much, and for a short video, I don't want to take up a lot of valuable time. But when it is a good time to show a few things, I just wanted to bring to your attention. So that's what I'm doing this morning, along with, of course, we'll do a quick analysis on the indexes. But today is quadruple witching, as we all know. I don't see a lot of sparks happening. Probably the first hour and a half. And many years ago actually, we had a lot of pent-up energy because all we had was monthly expiration. And now when you have options expiring on weeklies, you lose a lot of that energy. So I don't see being too much, but you never know what happened, what's going on with the Middle East out there in Ukraine, and then you have, of course, Russia, Ukraine, and then you have, of course, Iraq. So anything could happen. But let's go right into some of the index, what I'm showing you. As you know, I'm a trend trader, and I am very, very a cautious bull, if you will. And I just don't like to see things, and I want to point things out. When I see caution, I want to point things out to you. Does that mean to go short the market? Of course not. Absolutely not. But I want to bring to your attention that if we have a lot of traders that are long-term, swing-term, and of course short-term traders. So some may apply, some not apply. So just take that with a grain of salt. But when I see things like this, we have extreme complacency in the marketplace. This particular chart is an average true range 14 with the SPX chart. And when you have low ATR, average true range, you generally have just an increase of movement to the upside. As you know, the trend is up, as you can see here. And this here in particular is what I'm showing you. As long as the ATR continues to stay well below 13, even 14 for that matter, the trend would remain to the upside. Okay, so that's just a good guide to look for when you're trading, saying, okay, the markets are at these extreme highs, they're at extensions, and I don't see the data where Janet Yellen says that I don't see a bubble. When you have all of the S&P 500 marking about 89% price to earnings, that is extreme high. I don't think there's any wiggle room at all. And right now, as you can see, the last several months, markets are just buying because the Fed is buying and pumping liquidity in. And they did nothing other than they cut back another $10 billion, which is not much on their asset purchases, but it's not anything great. So they didn't do anything. She was dovish, and of course the markets rallied yet again. Can we get to 2,000? I mean, we're only literally 50 points away. We've done that, 220-point days, and you're there. So, yeah, I do think we could get there. I think it's crazy, and the only reason why I'm saying is not because I'm looking to short the market, but because it's not healthy for the markets. Because when the markets do decide to sell off, it's going to be a real nasty sell-off. And when that happens, I have no idea. No one knows. But it just, we've never seen this type of euphoria for many years to come here. Many years that we've been in this market, we haven't seen it. So something to keep an eye on. Here is something else I want to show you. XLU. Why would the XLU be up at these areas here, which is obviously a defensive sector, right? Looking for yield. Market participants are starting to break now, go higher. Well, if you have a real healthy market, why would you want to put money in utilities? Okay, so that's just something that I want to bring to a good point. Look at this is a good chart. It's a ratio chart. This is the consumer discretionary versus the consumer staples. Okay, when the markets are going up on this ratio chart, you see markets moving up here since June, July, August of 2013. That to me is still a healthy way of say, okay, we have consumer discretionary leading consumer staples, but now we have this breakdown from this past March, and you just don't have that, and yet everything is still continuing to move higher. That's another big warning sign. Now, you would say, okay, well, Mark, well, this is just one. It is. It's not just one. But if it was, yeah, you would say, you would discount a little bit. But it's not. It's the utilities moving higher, the interest rate sensitive REITs moving higher, consumer staples moving higher, and then you have the low ATR, and then you have the CBOE put call ratio. Now, what I did was I opened it up for the last couple of years here. We haven't been this low only about a handful of times. So the options market's pricing in extreme complacency, absolutely no fear, right? And then when you go into the VIX hasn't been this low in years. So this is also giving us extreme complacency. So this is why I say use caution. Do I go out and say let's go short the market? No, absolutely not. Let's buy stocks. If you can find them, you have to be selective. Buy stocks that have at least sold off and are basing now and moving forward, looking to retrace some of that move from making the lower lows, lower highs, to now breaking out of bases and at least starting a new uptrend. That's what I'm looking for. Some of the REITs and some of the solars that actually moved higher. They're a little tricky because if you don't catch them in one day, then they move up 3, 4, 5, 8%, and you really can't. The next day is a little difficult. But stocks like that, like Twitter, Facebook, that's been basing, doing nothing. Yeah, it's a counter trend trade, but you're better off. I think your probability will be a little bit better than buying something that's up, 20, 30, 40, 50% in the last 2 months. When they get to that extreme, they don't really move that well, and that's something that I'm not looking to do. So, just a thought. Just real quick, I wanted to mention. Somebody mentioned about the builders, and the builders are something that I would definitely look into. But watch the lumber prices. And remember, I said lumber was moving lower, and the ITB was just kind of hanging around there. Got to be careful because when lumber really takes a tumble, you see that we did have the pullback, and then when we popped, they pulled back and pulled up again. And you can see here, this is a small head and shoulders pattern. They haven't really been working well, the pattern, but it is the neckline coming in right here about 23.75. So if lumber prices kind of stop and then roll back over again, then I do think that the ITB would move lower. I want to see lumber prices start to steadily increase, making higher highs and higher lows, getting back up here where they're in sync again, and then it's a better trade. Now you can, of course, buy the builders, Toll Brothers, Lennar, D.H. Horton, all of those stuff you can do for an intraday trade. But for a bigger picture, for a better trend, watch what the lumber prices are doing, okay? Now let's take a look at crude oil. And I do think that between crude oil and China, at one point, something's going to snap. And when crude oil rises because of what's happening in the Middle East and starts to explode higher, and then we start breaking that 110, that 1618, I think all bets are off, and I think you will see some dramatic selling come into play. Right now, we had a couple days of pullbacks, and then markets just digested and just shrugged it off. And that's what's been doing. And you have to assume that it may do that again, right? You don't want to be looking to short the market because of that, but we want to see if everything starts to line up that way. All right, so I like crude oil long, I really do. It just I like to see a little bit of a deeper pullback, maybe into this zone, still keeping that low, higher high and higher low, but I like to see a little bit of a deeper pullback here. All right, so now we have the ES at the 1618 extension. We are at double extensions. Lunacy, if you are buying, adding to your positions up here, I think it's crazy. Unless you're looking for a quick move up to the 2000 and then liquidate, that's one thing. But I just don't see buying at these areas here when you're up 14, 15, 16 days and you're only down 2. And now you're back up again another 5 days. That's just crazy. Let the market come in and digest a little bit. This is just great. We literally, guys, we're up about 150 points. Well, not 150, but about 120 points from just alone from about 20 trading days ago. So you got to be careful here, okay? Definitely use caution. Here is the transports. Obviously, crude oil will definitely be a big effect on the transports when that does happen. So just keep an eye on that. Obviously, got a little bit of a snapback rally, and let's see where this thing goes here. Okay, FedEx, as you know, reported and did quite well. in their earnings report, and that's why that helped the transportation sector. Now, we broke through the 1272 in the diamond, so the next target would be the secondary extension of 1618. So keep an eye on that if you're looking for, or if you're looking to trade the Dow 30 stocks. Okay. Let's take a look at the IWM. As you can see, 5 days down, 3 days burst, 5 days down, another 4 days up, hitting those 78.6% retracement. So, next target would be challenging the highs here, and that's something you can see the markets, they just stretch themselves out, and it's just crazy the way the price action been going. But with lighter volume, nobody around, and you have the algorithms come in, they'll just continue to probe the market higher and higher until they find sellers. And when there's no sellers around, boom, that's when they start selling them. So just keep that in mind how that works. Last is going to be the Qs. Again, at the highs, we actually made intraday highs at 93.17 yesterday yet again. So we'll see. Let's just see what happens today. I do think that after about 11:30, things are going to pretty much dry up. And then I'm looking to really get started going into next week, the last week of the trading month. Now, just looked at the Traders Almanac, and following quadruple witch on Friday, that Monday usually is negative for stocks. So just take that with a grain of salt. Have a great weekend, everybody. Take care.